Hi guys, good afternoon. This is Abid Khan and you are watching Karachians Academy YouTube channel. We were doing CIE past papers of of AS level, right? Accounting paper 9706, paper number 1 of MCQs variant 2. We have selected year 2022 February March attempts. So in our last videos we have done with till question till 15th, right? So now we will restart with question number 16. So let's move on to question number 16. Okay, this is question number 16 and what it says and what it requires. 16, X and Y are in partnership, sharing residual profits and losses equally. Always mark the important points, right? Partners are charged with 2% interest on their drawings. Okay, on drawings, partner will be charged with 2%, right? And Y is entitled to a salary of 10,000. And okay, this is very much clear. The partners drawings for the year were as follows. So 2000 X and 8000 Y. This is full year drawings. So drawings they have given you the percentage, annual percentage. The profit for the year was 52,000. How much did each partner receive as a share of residual profit? He's saying the share of residual profit simply. And what is residual profit? Actually the profit that we earn, which is the profit for the year and which is transferred to the appropriation account. And first we appropriate the salaries, interest on capital, or and interest on loan, and interest on drawing. We adjust all of them, and after that what is left, that is the residual profit. So they are asking you to how much each partner will receive his share of the residual profit, right? So we have to work out residual profit and then we can easily work out. So first of all we will see 2% is the drawing. So 2% drawing, we should calculate how much it would be. Drawings on 12,000 into 0.02, 240 we will charge to partner X, and this interest on drawing will be some sort of a benefit, some sort of a income, and this is not an operational income, operational benefit. It is some sort of a appropriation, the benefit for appropriation. So they will charge and they will debit the account of X and treat this interest as their income in profit and loss account. Oh, sorry, in appropriation profit. How much on 8,000? If we calculate, this is 160. The total interest income would be 160 plus 240. It will be 400. This will be interest income, right? Okay. So then we can calculate how much is the profit. Profit is 52,000. Right? XY are partners sharing profit and losses equally. Partners are charged with 2%. Y is entitled to salary. So out of this profit, first we will allocate or we will appropriate 10,000 salary to Y. Okay, this will be deducted from the profit, and this 400 would be an income to all the partners. Individually, these 240 and 160 will be charged to their capital, and this income will be charged based on their ratio. Their ratio is equally they will be distribute all profit and losses. So 400 is the profit which interest income. Therefore your total would be 52, and out of this 52,000 you deduct 10,000 and you add 400, right? 42,400, it will be the residual profits. Okay, so they are equal partner. Ultimately it will be charged to them equally. This will be 21,200. Each partner will get 21,200. Your answer will be D. Hope we are done with question number 16. Move on to 17. Hope this is clear to you. Okay, come to question number 17. Which statements are correct? Very carefully. Sometimes it says incorrect, sometimes question says correct. So you very carefully have to read. You have to find out the correct one. Okay. Now, dividend can be paid out of the general reserves. Dividend can be paid out of the general reserves. Okay. So dividend means this is stock dividend, right? Which is not paid in cash. Cash dividend and stock dividend. Stock dividend which is paid in the form of shares, right? So can be paid out of the general reserve. Yes, sure. Because from retained earning we transferred amount to general reserve, right? General reserves. Both of them are revenue reserves. If we can declare, when we can declare profit dividend from retained earning, then we can do it, because both are same, both are revenue reserves. So this one is correct. Okay. Rights issue can be made from the share premium account. This is incorrect, because what is right issue? Right issue basically is your additional capital, which additional share capital which you ask first you give right to your existing shareholder. If they do not exercise their rights, then you go to the general public. So this is a new what entry we make when we issue. Normally it is bank. If I say 100,000 of the additional capital you are requiring through rights, so ordinary share capital you will credit and bank will be debited, right? So they are saying right issue can be made out of the premium, so there is no involvement of the premium. And another point to note, premium is a capital reserve. From capital reserve you cannot declare the dividend, so this is incorrect. Okay, what is point 3? Point 3 is the general reserves can be created from retained earning. It is normal practice. We do create, so this is also right. It means this option 2 is wrong. This is right and this is right. 1 and 3 is B. For 17 your answer would be B. Move on to question number 18. What is question number 18? Okay, let's move this to here. Okay, question number 18. What question number 18 says? Just read it carefully. Okay, what it says: A limited company had the following balances on 1st January. Very carefully read all the dates, question and requirements very carefully. Sometimes it plays, the examiner plays tricks with you and you uh, you come in a straight and you lose your marks. This is opening. Actually, this information is for opening. Revaluation reserve opening and 142 retained earning. Profit for the year ended 31st December 2021 was 109. This is full year profit, right? This is profit for full year. Okay. The revaluation reserves 20,000 was created 2 years ago from a revaluation of a property. Okay, in 2 years back, you revalued your assets and they revalued upside. So reserves were created, your assets were debited and your reserves were credited. So this is because of 2 years back appreciation, right? So what had happened was created 2 years. The same property was revalued on 31st December 2021 with a revaluation loss of, okay, 2 years back they made a gain on revaluation, right? And after 2 years they are making a loss on revaluation. Okay, let's see what the next question forward. What it says: on 1st August 2021 an interim dividend 40,000 was paid. Okay, this is interim dividend and this is paid on 1st August and year is December 31st is ending. So this is 6 months interim dividend you paid in the month of August in the same year. Okay, on 31st December 2020 same year a final dividend 55,000 was proposed. What was the value of the retained earning at 31st December 2021? What you have to calculate very carefully. December 2021 they are asking you for balance of retained earning only, right? What was the value of the retained earning? You have to work out the closing balance of retained earning, so you have to confine yourself to the retained earning only. Okay, so what we can I can solve this question here. So you have to work out your retained earning, right? First 2021 your opening balance is 20,000. Okay, and how much was 20,000 was revaluation. My apology. Retained earning was 142,000. Okay, and then you profit for the year. So you earned profit. How much? Profit was 105,000. So 105,000 will be added to the retained earning. Okay, and what else? Revaluation reserves 20,000. Okay, revaluation reserves, what they are saying, created this revaluation loss. Revaluation loss, actually they have made a loss of 35,000 and previously they earned profit of 20,000, right? This was gain. So net how much is this? Is 15,000. Your net loss is 15,000. So this, out of this, yes, let me explain this why we have done this, because if you in your AS level book, David Hopkins, if you have studied that, so revaluation reserve is very clearly explained there. The revaluation reserves, if you have created, this cannot use, this is a capital reserve, so you cannot use in elsewhere, except you can use in uh, offsetting any loss that arises in future. Means in past, if you have earned some gain, you keep that, and in future, if you earn some if you sustain some loss, then that loss first will be adjusted against the gain on reserve that you have made. The balance you can take to retain earning and all these things. You just I'm referring you, and you study that portion of capital reserves in your book, right? So revaluation reserves, 35,000 was the loss, so 20,000 has already been adjusted against this, right? 20,000. So this 15,000, ultimately there is no other way except of retained earning, and this is the highly flexible one. So most flexible means equity portion. So you deduct this from here. So, and what else is there? Okay, so we have done this, okay, and on 31st December 2021, a final dividend 55,000 was proposed. I have barked to the proposed. Actually, always remember, in your in your financial statements and in your changes of changes in equity, statement of changes in equity, so only the dividend what you have paid and the money has gone out from your bank, only that portion of the dividend will be taken to financial statement, right? Actually paid dividend will appear in your the statement of changes in equity or in your financial statement. Proposed dividend has nothing, it is only proposed. So this is not shown in the balance sheet, in the main balance sheet. Actually we show this as a proposal, as a footnote to the balance sheet, that the directors are proposing so much amount of the, so this is proposed, so this will not be appear in your financials. So we can see how much is total, 142, and then plus 105, and then minus 15, 2, okay, 15, 10, okay, 105, 15, 35 minus 20, 15. Let me check the calculation. 142,000 and plus profit is 105,000. This is 247,000, right? Out of this 247,000, okay, interim dividend, my apology, interim, we have taken this reval, and we have to take interim dividend 40,000. This will also be deducted. 247, now we can calculate 142 plus 105 minus 15 and minus 40, 192. This will be 31st 12 2021 retained earning balance. So your answer will be D. Hope this question is clear to you. We have done with the question number 18. Now move on to question number 19. Moving on to question number 19. Okay. What question 19 asks you, right? The bank balance of a limited company was 390,000 before following transactions. Okay. Before following transactions. this transaction took place after this balance. Okay, an issue of 500,000 new shares of 0.5 each was made at a premium of 2.5. It means total 0.75. A debenture of 100,000 was repaid. Okay, this is outflow, cash outflow. A bonus issue of 100,000 shares of, this is bonus issue. So bonus issue 0.5 each. Okay, so we will see what was the bank balance. Okay, so they want to see how much is the bank balance after these transactions. So he want to just test your understanding of cash inflows and outflows and your overall understanding. We can see the balance, your cash balance is 390,000. Number one, the issue of 500,000 0.5 means ordinary share capital. You issued 500,000 at face value of 0.5. So let us calculate 500,000 into 0.5, 250,000. So 250,000 you will get from when you will issue, you will get the money, right? And 0.25 share premium, 500,000, 0.25, it would be 1,25,000. Actually, what your entry would be, you will be getting an amount of 375. You will be getting amount in bank, you will be getting 375. You, out of this 250,000 would be a share capital and share premium would be 1,25,000. So your bank will get increased by 375,000, right? This 375,000. This will be added. Okay. Debenture 100,000 was repaid. Okay. Debentures repaid. How much? It was 100,000. So you will deduct it. This is very simple question, guys. So debentures repaid. Now bonus issue of 100,000. Here most of the students get confused. They either some students add it and some, so it has no impact on bank or cash. You see, what is the bonus issue? Bonus issue when we are unable to pay dividend in the form of cash, we are running short of cash, and or if we have enough cash but our future outflows will be badly impacted if we pay dividend in cash. So what we do, we pay dividend in the form of shares. So it is simply an adjustment. So from retained earning, you debit. How much is 100,000, 0.5, 50,000. You will debit your retained earning account and you will issue them share certificate of 50,000. So here no bank, there no involvement of bank. So this 100,000 we will not be considered. So this is all, and debentures paid and 100,000. We can do its total. 390,000 was your opening, plus 250,000 plus 125,000 minus 100,000. Okay guys, this is 665,000. So your adjusted bank position would be 665,000. So your answer would be B. Hope this is clear. Move on to question number 20. What might cause a decrease in non-current assets turnover? Non-current assets turnover. They are saying ratio will decrease. Very simple, guys. First, you should know what is the formula of asset turnover. Its formula is sales over to your net current assets. So they are saying what causes decrease? What will cause decrease? Number one, either your numerator says if it gets decreased and NC remain constant, your ATO will get reduced, or if your sales is constant, no change in the sales, but your assets get increased, then ultimately it will get reduced. We can take a very simple, so an increase in expenses. So this formula, this is neither expenses are in this is sales. So expenses in formula, it has no relevance. There is no involvement of any expense, right? Increase in sales revenue. If sales revenue increases, then your ATO, non-current asset turnover or NCATO, you can say net current asset turnover. It will, if it is increasing, then it will increase. We can take the very example, if in case it is 50 over 25, the current ratio is 2, right? 2 times. In case if you increase this 50, if you increase 50 more 50, 25, 100 over 25, 4 times. If you increases the sales, it will increase, but he is asking about the decrease, so this is also not applicable. Purchase of new current asset, it makes sense, because this one, if the situation comes, sales remain constant, asset from 25, you add more 25, so this will be 50 plus 50, 1. Previously it was your 2, and now as you increases the net current assets, it is getting reduced from 2 to 1. So it looks that this is more relevant. Selling non-current assets, no. Selling non-current assets, we can take example here. If it was 50, if out of this 25, I say 5 you have sold, then it will be 20. What will be the percentage? 50 over 20, this will be 2.5. It is 2, this will increase, so this will not decrease, so this is also not applicable. So our most relevant one is C, right? The correct answer is C. So your correct answer is C. Okay guys, so that's all for today, and we have done our question 20. In my next video, I'll release it today. So remaining question 21 to 30 I'll be doing in the next video. So you keep in touch and keep watching our YouTube channels, and that's all for today, and thank you very much. Bye for now.